Members? Let's see, let me pull up the agenda here. Okay, I'll take a motion to, I've got a little interference here. Take a motion to approve the agenda.
I'll make
So
a motion
moved.
to approve the agenda.
Second.
Second? All right, all in favor?
Aye.
Aye.
All right, let's move on to the action items. The first one is proposed updates to procurement policy by Amy Bevins. Amy?
Good morning. Good to see all of you.
Good morning.
Okay, thank you. Good morning, Mr. Chairman and members of the Finance Committee. My name is Amy Bevins, and I'm the Loudon Waters Procurement Director. The purpose of this action item is to seek the Finance Committee's recommendation to the board to approve the proposed revisions to the Loudon Water procurement policy. Procurement of goods, services, insurance, and construction, as well as the disposal of surplus property, must comply with the Virginia Public Procurement Act, the VPPA. Loudon Water first adopted purchasing policies and procedures in 1983 and has revised the policy periodically to reflect legislative and administrative updates. Revised policy before you today is proposed to become effective October 1st, 2026. This year's revisions address two changes to the VPPA and make related terminology and administrative updates within the policy. The first legislative change is to Virginia Code Section 2.24310 concerning participation in public procurement. In the code, military family-owned businesses have been added to the categories of businesses whose participation public bodies are required to facilitate through their written programs. Statute also adds status as a military family to the protected categories for purposes of non-discrimination in the solicitation and award of public contracts. The code now incorporates the definitions contained in Section 2.24310F, including the definitions of military family and military family-owned business. The revised procurement policy implements those legislative changes in the following ways. Military family-owned businesses are added throughout the policy provisions in Appendix B. Appendix B's terminology is now broadened because the policy now covers categories beyond the statutory definition of SWAM. Collective term covered businesses and organizations is now used to include all categories such as small, women-owned, minority-owned, service-disabled, veteran-owned, and military family-owned businesses, as well as employment service organizations. And definitions are now incorporated by reference to maintain consistency with Section 2.24310F as amended. Second legislative change is Virginia Code Section 2.24311.3 concerning contracts for information technology, goods, and services. For this section to apply to Loudon Water, its provisions must be formally adopted as part of Loudon Water's procurement policies and procedures. Contract terms that conflict with Virginia law will be invalid and enforceable to the extent of the conflict, while the remainder of the contract will remain enforceable. Terms requiring another state's or country's law, jurisdiction, or dispute resolution venue will be void. The contract will instead be governed by Virginia law with jurisdiction in the courts of the Commonwealth. The revised procurement policy implements those legislative changes by adding a new section. New technology contracting provision is added to formally adopt Section 2.24311.3 and establish Virginia law and Virginia courts as controlling when a conflicting contract term provides otherwise. Revised procurement policy is included in your packet for review. These revisions maintain Loudon Water's compliance with the VPPA while providing clear guidance for staff and suppliers. And I can answer any questions for you.
Amy, it's Sean Kelly. In the code, it's military family, the term military family-owned business, is that defined?
In the code, it is defined, and we did add a definition section to our policy to reference the 2.24310F, which
Great.
refers back to
Okay.
those terms and uses those definitions.
Is it necessarily a small business by chance? Is it any military family-owned business, I guess, what I'm getting at?
It's considered a covered organization. So it is not as part of the classifications of a small women-owned and minority-owned business.
Minority, okay, that's where I was going. Okay, perfect, thank you.
You're welcome.
Any other questions from the board? Okay, I'll make a motion to move the recommendation to the board for approval. To the
I'll
full board
second.
to approve the Loudon Water procurement policy as revised. Excuse me?
I'll second it.
Okay. All in favor?
Aye. Aye.
Okay, Jewel, that'll go on the, well, thank you. That'll go on board as an action item.
Action item. Thank you.
Thank you.
Okay. Good morning. I'm Sally Daler. I'm here to report on the 2026 mid-year review results. We're going to talk about the background, the process, what we're seeing, the key indicators, and the next steps. Okay, so setting the stage. Back last year, we presented a conservative operating budget. And as a reminder, we set the operating budget at 97% of the RAID study. Capital spending plan was approved for $221.5 million. We continued cost-saving measures for controllable costs, and we exercised prudent financial planning. Process, how we looked at these results, we evaluated revenues, expenses, and capital expenditures through June, and we projected operating results and capital expenditures through year end. Overall recap. Operating revenues are expected to be about 109% of budget projections. Operating expenses are expected to be at 98% of budget. Non-operating revenues are projected to exceed budget, and non-operating expenses are expected to come in below estimates. Funding will be available for our anticipated capital expenditures, and this experience will be a factor in developing the 2027 budget. These are the details. So as a reminder, if you look at the middle row there, our total operating revenue budget was $144 million, and the projection is coming in at $156 million. If I compared that, so that's $8 million over on the sale of water and $4 million over on the sewer disposal charges. That's really what's driving that category. Moving down to non-operating revenues, the availability charges will come in a lot stronger, plus $35 million than budget. And then investment income, $7 million over budget. We'll break that down a little bit more on the next slide here. So the operating revenues are expected to total 109%, and it is being driven by the user rate increase that went into effect January 1st, as well as water usage compared to prior year. Non-operating revenues are being driven by ERCs. They're ahead of the year-to-date budget. The budget, as a reminder, was $2,580, and we're going to increase that for the full year to $4,600. And interest income is expected to be above budget also. Are there any questions on revenue before I switch to expenses?
Sorry. That's a big ERC jump.
It is a big ERC jump. I do have a slide on drivers, but we'll address it here. Two main factors. As discussed with the board, we've had the reclaimed water capacity issues. So the conversion of some of those data centers to potable water is driving it, as well as we've seen the hyperscale data centers, which are coming online faster than we had projected. So remember, our budget was very conservative. We did stay in line with the rate study.
Yep.
What's the other water and wastewater fees that are substantially lower? Just what makes that up?
So the biggest category.
I mean, I don't mean to be nitpicky because all the other revenue sources are way above and this one's below. I'm just curious what's in
Yeah,
that.
that's plan review fees are large. And then just all these other miscellaneous fees,
Okay.
charges for labor, charges for equipment.
Gotcha.
Yeah, we can go back. I think you saw. Yeah, it's a little bit under, but yeah, the main driver. Okay. Expenses are projected to come in at 98% of budget. So breaking it down, personnel is the biggest driver here. 2.6 million under budget, which is being driven by our conservative health insurance forecast. Wholesale water and sewage disposal, pretty much in line. We did increase wholesale water a bit. And then interest expense coming in slightly under budget. So the drivers for expenses, personnel, as we discussed, the main driver is health insurance, but we do always have open positions, which is also contributing to it. Wholesale water, as discussed, is slightly above budget due to increased water purchases. Other materials and operating expenses will be below budget a little bit, and then depreciation and amortization are expected to be below budget. We can go back. Any detailed questions on expenses? Okay, capital expenditures, you will hear in detail tomorrow, but as an overview, we are preliminary estimating 75% of the original plan, and we do have funding available to finance that. Then the drivers, as we already talked a little bit, there's our ERC chart on the right. So increased ERC projection is really driving our non-operating revenue. The economy, we're continuing to see permits and increased new accounts, and we'll continue to monitor for the second half of 2026. I did pick the midpoint of the forecast, so it is possible, as we see at the end of the year, you know, we might have more than, you know, this number if they want to slide into this year and avoid paying the increases. So we'll see. But we'll continue watching for the end of the year, and you'll get your monthly updates. And then we always continue evaluating cost saving opportunities as they come up. Next steps, we've already started preparing the 2027 operating and capital budgets. They're due early September. We'll be presenting to you at the October meeting. The capital spending plan will be presented to the Finance and CIP joint meeting in November, and then the board will be asked to approve the final budget in December. We will review and update the 5-year financing plan and incorporate our budget and capital spending plan and present it to you in the first quarter of 2027. What other questions can I answer?
I have one, Sally. With the additional revenue coming in from the ERCs, does that change any of our borrowing or have any other implications for us?
Great question. It does. I did preliminary roll it into the 5-year plan, and our borrowing will be reduced in 2028 by 92 million. So we still have borrowing that year. Right now, it's projected to be 65 million. And in the total 5-year plan of finance, we've reduced our borrowing by 124 million.
Okay. Great. I mean, you guys do a great job with the ERCs. They're so difficult to predict. And,
Thank
you
you
know,
for
so
saying that.
well, it's so tough. It's like impossible to predict. It's one of those things, and yet we have to do it. But you guys do a great job with it, and you know, obviously it's a good thing to have all this money coming in. So if we can push off some borrowing in the future, great.
Well, and kudos to Micah and because they are developing a BI report and they do use it and the data is getting better and better. So hopefully we will have more accurate forecasts over the next few years.
That's great.
Okay, moving on, Sally,
Moving on to July,
July.
July monthly results or year-to-date results were continued, just like we heard. Operating revenues are above the forecast, so 87 million versus 77 million. Non-operating revenues are 53 million as opposed to 37 million. Expenses continue to be below budget by 5.7 million. And my little mouse isn't. Oh, it's not on. There we go. So expenses, yeah, 5 million under. And then ERCs, that was the same chart you just saw, but there's the detail. We did have 682 connections in July, back down in the 100 range as of August. I did look yesterday. Mostly driven by data centers, as you can see, 58% of our connections are that. And then the actual numbers for capital spending plan, we've spent 84 million to date, which is 72% of the original capital spending. And here's our breakdown by month and cumulative, broken out by user rates and availability charges. Any questions on July?
Sally, just an overall question about back to ERCs for a second. Favorite topic of the rating agencies. We can demonstrate that we don't have a reliance on that to cover ERC's connections to cover operating expenses. That was always a criticism, at least by Moody's. We're too dependent on ERCs. I know that's gone away, but you know, that may rear its head again.
Right. We do have our coverage ratio, which debt coverage ratio, which excludes the availability charges. And that continues in the 5-year plan to be within our targets.
Good. And that's, if I recall, that's very conservative.
Yes, the rate study and budgeting, we do tend to stay on the conservative side. So that's why I think we see the upside also each year.
And the other thing, Mr. Kelly, if I may add, is in your 5-year plan, in the past few years, Davenport has incorporated a scenario where there are no more data center connections and seeing what that does. And you're still well within your coverage range. And that 5-year plan is shared with the agencies on a yearly basis as well. So they're seeing that projection.
Thank you. Yeah, I do recall that.
And then I have a question. As we add these larger data centers to the mix and the ERCs are going up, you talked about the addition of potable water. Are we looking at, I know our number now is 9 or 10 or 11% for the amount of potable water that goes to the data centers. Are we estimating, is this a dynamic number where we're changing it every month as we hook up these larger data centers? And so are we monitoring that? Is it going to get to 15%, 20% of our usage?
To your question, yes, Mr. Allen, we're constantly monitoring their usage and where it's going. I don't know if we estimate it's going to get up to 15% in the near future. I think it's something that we're going to continue to monitor. I can't imagine. I mean, I think when you add in reclaimed water right now, we're at 15% of our total water production. But I see Alton has joined. Maybe he has a better answer than I do.
Yes, I would just add to what Brian said, Mr. Allen. We are monitoring that. We actually just wrapped up our water master plan and demand forecast out to 2050, and we do see that percentage is going to continue to grow out at that 2050 horizon, where it will increase, beyond the current 10 to 15% up toward 20 plus percent at the 2050 horizon. But it's something we're watching very closely month to month as well.
And I would think, like, we're on the cutting edge of this, like, we're the tip of the spear when it comes to providing this much water to this many data centers. So maybe we need to, I mean, what happens if there's some water shortage, and do we prioritize the data centers getting more water than residential customers? I mean, as it becomes a larger share of our water production, I'm wondering if they start to get influence or they make demands, and how do we balance the need for that? They can label themselves as critical infrastructure. I know some of the utilities do. So I don't know if we've thought about that going forward, but just want to get ahead of that.
No, your comments are well taken, Mr. Allen, and it's something that we do think about, and it's something that, just our philosophy as an organization is really trying to watch our overall capacity and availability, and ensure that supply is resilient. Obviously, our Quarry system, our Beaver Dam, Goose Creek system, we're looking to continue to leverage those assets to make sure all of our customers are in supply. But the acute challenge you just mentioned is something that we're going to continue to monitor closely and try to improve as we go.
Okay.
I have a question. Do we have any policy on that? Or is that something that we plan on working on? It'd probably be good to have that ironed out, I would think, ahead of time.
We don't have a specific policy. The ordinance for drought mandatory restrictions, and Mark can answer this better than I can, is a county ordinance. And so, Mark, I don't know if you want to explain that a little bit.
Yeah, we do a lot of work with water demand management. And what we generally do is more on a voluntary and educational. We do that every year. As we've had, increased sort of characteristics of drought the last few years, we've been pretty proactive with that. We've had good responses. But as it relates to getting into a policy level, and if we were to get to a situation where we want to get into mandatory prioritizing, who's getting how much water, we really start to rely on the county's emergency water management ordinance. And as Mr. Yudd is well aware of this, there's a lot of history with it. The ordinance has been in place in Loudoun County really over the last 20 years or so. It hasn't changed. And we're actually actively in process with the county attorney's office right now, trying to get some updates. We've had different conversations over the last 4 or 5 years at different times incrementally, but right now we're trying to work with them and create some changes that will set up a little bit of some hierarchy. And I think the question of data centers and where they fit into that is going to be something that is still a discussion that's ongoing. Ultimately, it's going to be the county's choice on that. But right now we still follow a lot of the more general authority level policies that our responsibility is to serve all the customers, and which ones get restrictions, which categories. That's still something we're talking through as we speak.
I think that's a good answer, and I'm glad to hear you're working with the county on it. You know, I know as a former member of the Board of Supervisors that they're so busy, they don't get to look at every policy and update it as often as some of them probably should be. So that might be one that we want to at least print off and really take a good look from a Loudon Water perspective. And if we agree with it, great, just let the county know. And if we don't, then maybe we start to, I guess, communicate more with the county and even lobby if necessary for some changes to that policy, if that's what we're going to go by. I just feel like we should have some input on that. And then also we should evaluate it based on any updated laws. I know there's a lot of changes happening at the state level recently, especially regarding data centers. So just to make sure everything is in compliance with, you know, all of the laws that we need to follow, and that we actually have some input on that. And hopefully we can do it ahead of time when we're not in any type of crisis situation.
I think your comments are very, very well, spoken there, Mr. Buffington. I agree all of that. I maybe didn't characterize that quite right. They are relying heavily on us to work through, really in partnership on this ordinance. It's an ordinance, obviously, that's owned by the county, but they're really looking to us for guidance, and so we're working hand in hand with them. And generally, I think there's some good changes that are in the works right now. The ordinance is all based on the idea of drought, which gives you levels of warning, and you kind of see trends coming. More recently, there's also items like and issues like contamination, which happen very quickly. Or we've got both community systems, which are on groundwater wells, and we've got our central system. And there's not a good ability to segment that. It's kind of all or nothing. So there's some good changes that we feel are in the works and coming. The one aspect that I think where you were getting to that, is sort of new is how do you categorize data centers? Are they critical infrastructure, as Mr. Allen mentioned, or do they fit in the discretionary use, such as irrigation, outdoor, uses that are typically in most of these kinds of ordinances and get restrictions? So that's a kind of piece of it. And we're definitely having that conversation. They're really looking for, at what our thoughts are. And we're working pretty much hand in hand in that.
Thank you, Mark.
Chair Kelly, I wanted to know if I could just say a few things too, just to get a couple points out there.
Yes, thank you.
We in Finance Committee, we're looking at ERC numbers, and ERC is tied to revenue coming in and revenue projections, but it's not necessarily equivalent to water usage. And so if you look at the ERC charges or costs, they are connected to like meter size, anticipated meter size, but that doesn't mean in every case that every data center will be using the same amount of water based on the technology that they have inside the house or in their operations. And so I think that's another way to factor the percentage that Chair Allen mentioned earlier, and Mr. Eccles responded to, that we're seeing continued growth or steady rate of ERCs, but we should also discern between actual water usage. There is a difference between usage and what somebody pays for a meter size. And I say that I just had an experience in another Virginia jurisdiction where the Water and Sewer Authority came back to us and said, you are proposing a data center, but you're based on your demand that you've estimated, given the technology that's going into this particular building, we think you should make your meter size smaller, because less water would be going through that system. And so anyway, I raised that just to say we should, in addition to everything the board members are saying about getting closer to the percentage, having articulated policy for how we deal with this, tying it to supply constraint periods like the drought ordinance that exists. But we also need to factor in what is actual usage so that we can respond accordingly. So I don't know if that's a question or a statement, or if any of the staff want to respond to that, but I see Mr. Eccles.
Yeah, if I may, Mr. Yudd, I'd just like to say, rest assured, our master planning modeling is certainly incorporating more than just ERCs and looking at, our AMI system metered usage on all of our current facilities and a lot of volumes of other data to get at our current projections out to 2050. But it's not something that we, stop there on. It's something that's, a continual improvement process in the periods between when we're doing the large master plan updates. So absolutely, point well taken. I did want to mention one other thing, because in addition to the point Mr. Buffington raised and Mark's response, I kind of wanted to tie back and connect the dots to, at the macro level here in the region, we have, ICPRB, and, for our source of the Potomac River, we have the low flow allocation agreement and the water supply coordination agreement. So everyone that is using the Potomac River as a resource has this coordinated effort in place, and several layers of things, which include like our resilience in our quarry to be able to help sustain these drought periods. And that's something that then we back up with Goose Creek and Beaver Dam, so that, really all of these layers of resilience are there to protect the entire customer base, that when stress occurs, we're not, really having to treat any customers any differently. We're able to continue supplying everyone. So that's really our robust plan A. And then the plan B, or the emergency scenario, which again, Mr. Buffington, I think your comments are really well taken, that we want to continually improve that process as well. So we're looking forward to continuing that going forward.
Elton, it's Sean. How do you factor in your calculations whether the data center, the new ones coming online, are going to be air cooled versus water cooled? And do you have any influence over, if you see that there's a lot of demand or pressure on water cool, do you have any influence on their decision as to whether to go air cooled or water cooled?
Really, we see a mix come in, and there are a lot of factors that drive what a particular developer is looking to do. But we really see, as things have progressed through our system, it has struck a balance. We're at 40% potable, 40% air cooled, and about 20% reclaimed data centers in our system right now. And we're just continuing to work with developers as they come in and talk through their constraints, our constraints. I think it was raised earlier in the discussion today with, coming up against our total available reclaim supply. We're having to, sit down with each applicant as they come in and talk about, what is available on the reclaim side, what can be met beyond that with potable. And even with some of the hyperscalers now, we're seeing, the range of technologies being put in these facilities. So we're partnering with the developers to understand what can be best for our system and our operation.
Good.
I think I would make, one additional point, and it comes up because we have been having conversations with utilities really across the country. I mean, because we get a lot of requests to talk about data centers with all of the number we've got and then the years of experience. And, not all utilities do everything exactly the same, but just to make a point of clarity, and it gets to the what Mr. Yudd brought up around meter size, and it gets to this conversation of usage and max day usage. But, we work early in our land development process with the setup and with data centers, they're cooling. We learn that as early as we can. We don't influence which they end up choosing, but But one of the things that, is real critical, they pay an availability fee based on their max day use. And we've learned from other utilities, not every utility has always looks at it like that, because data centers will make an argument that they may have a couple days a year that is their max day. During cooler months, they may use very little, and that is a reality. But we hold on to that pretty strongly because, again, it goes back to the way we've always planned. They're looking at whatever that max day is. We have to plan for that capacity within our system, and we hold on to that pretty strongly. And ultimately, that's they've moved forward with that. But some other utilities that we've talked to, have tried to look at it a little differently and tried to sort of spread out the usage and average it out, and that's what they've charged at. But I think we've been pretty successful with the way we've set things up, because again, we have to plan for that capacity that they may use on that max day.
Do we know of any other utility in the country that has 10% of their potable water going to data centers? Do we have the largest percentage?
I don't think we know that answer, but certainly we know we have more data centers than in any other place. But I think there's a couple different things. Not every utility, many other utilities in areas of the country where they don't have growth like we do, and haven't had the need to plan and continue to grow their system. They may have a couple data centers come into their area. They may be up against their capacity limits a little closer. So I don't think we know that answer. And I think others that just don't have the same history and circumstances we have, maybe in some different situations.
I mean, I only brought this up because in the last month I've had two separate conversations with people about potable water usage vis-a-vis the data centers. And I told them it's only 10% of our potable water. And both parties were like, it's 10%. That's a lot. So my perspective was that it wasn't that much, but theirs was that it was a lot. So, I'm thinking if you knew every utility in the country and all the portable water percentages, and let's say the highest was 5 and we're at 10, then their argument would hold water vis-a-vis that, we have a large percentage, the largest percentage of our water going to data centers. So that was my concern about it. And if we're having all these hyperscalers coming in and we're up to 15% of potable, 16, 17 in 2 or 3 years, are we like out there on an island vis-a-vis every other utility? And do we have the policies and the plans, which we're talking about today, to not only accommodate them if there is a cyber attack on a utility like Fairfax, where they're down for a week and we get into this argument about what's critical infrastructure? I mean, we can go on and on and on about this, but I just wanted to let you know why I brought it up, because I was shocked that people thought 10% was a lot.
Yeah, I think it's a good point. It's interesting, the different perspective. I think, you have to always look at the full context. It's one thing to say there's a number like 10% of our average annual usage, but you have to start to look at, okay, what kind of capacity do we have in our system? Where do we expect our growth trends to continue to go? We've got multiple sources with the reclaimed and the potable. So I think if you start to look at the full context, that's always really important. And that'd be the first thing I'd start to ask another utility if they had concerns about, say, a percentage as a single data point.
So I just wanted to add on this topic. The data centers do have a big focus in the public sphere right now. But if we look at them as industry overall, there are many utilities that 50% of their potable water supply could go to an industry like chip manufacturing or a different industry. So having a utility with a large portion of industrial use is more common. And while we may be leading the data center services right now, a lot of smaller utilities are starting to get larger data center campuses. So when those do come online, you are going to see utilities with higher percentages just because they're small. So it's also kind of hard to do an apples to apples because we are a good sized utility, which allows us to support that larger population of data centers. But I did just want to add that, before data centers existed, there are still just large industrial users that can take up a good portion of the potable water supply. The public just have never asked that really before.
No, that's a really good point. It would be maybe good over the next couple of months to have the board members, to have some talking points along those lines, Kendra, where we have a utility that you can say, oh, for instance, this utility supplies 30% of the water for, all the automobile plants in Michigan. So that kind of minimizes the percentage that we're experiencing. And so anyway, that's a good point.
I had another thing I wanted to mention, because I think it puts it all into context. When we embarked on our Potomac Water Supply Program to take our capacity from the 50 million gallons per day that we have with Fairfax to the 90 million gallons per day we have now with the Potomac Water Supply Program, in the 2000s, the projections were showing we needed that 90 by 2040. And at that point in time, the data center industry really didn't exist. And it existed, but no one really knew it was going to take off the way it did. And so really that projection getting us to 90 in 2040 was really just the continued growth as a suburban area of housing and so forth. And, so what we're seeing now is we actually now have over 200 data centers, and we're actually still within that 90 million gallons per day of total capacity through 2050. So that time horizon has moved out, and we're still managing within that capacity, which I think speaks a lot to what we've done with the reclaim program, balancing the potable supply and balancing with the natural development of some of the data centers as more, quote unquote, air cooled. So there's like this sort of balance of all of these facets that's helping, keep our system and water supply, again, well balanced and resilient.
None from me, Mr. Chairman.
Okay, thank you. Quarterly investment review, move on to that then.
Yes, the final item is our June quarterly investment review. So our total investment portfolio was $426 million. Biggest piece of that is invested in U.S. Treasury notes, followed by our liquidity, then federal government agencies, corporate bonds, and municipal bonds. Here's our comparison over time. Our average yield was 3.75 as of the end of the quarter, and the AAA borrowing rates were 4.13. We did have some maturities during the quarter. So we had 50 million, which was a treasury bond and an agency. And then we purchased 17 million. Summer is usually our high spend time. So we did not reinvest everything that matured because we are actively spending in the summer. The LGIP average rate for the quarter was 3.83%, and we'll continue to monitor interest rate trends and target all type of investments and maintain our liquid investments so that we meet our immediate needs. Any questions on that? Okay, that was the last item.
Okay. Anything else from the board to bring up at this time? Okay. Next meeting will be September 23rd at 8 o'clock. Take a motion to adjourn. Make the motion to adjourn. Okay, second. All in favor?
Aye.
Aye.
We do a roll call, Jewel.
Thank you, Mr. Buffington.
Yes, ma'am.
Mr. Campbell,
Aye.
Mr. Kelly,
Aye.
Mr. Yudd.
Aye.
Adjourned at 8:47 a.m. Thank you all.
Thank you.
Thanks, everyone. Have a great day.